Excellent. So thank you very much. When Tim Grafton from the Insurance Council asked me to talk, I'm from Resilient Organisations, so we focus on how do you look at an organisation in peacetime and try to understand how that organisation is likely to respond when its feet are put to the fire. Will it be one of those organisations that can pull itself together and rally and respond to that major crisis? Or will it be one of those organisations that crumple and fail? And the art is not in identifying that after the crisis. I think just about any of us can identify resilience after the crisis. The trick is looking before the crisis and trying to understand which organisations have the capability to get through or not. So when Tim asked me to speak about resilience, I said, well, are we talking about resilience of the people you insure, or are we talking about resilience of the insurers? So Tim said, well, the topic of this conference is thinking differently. So let's challenge them. Let's get them to think about the resilience of their own organisations. So here we go, insurance companies. How resilient are you? Hopefully by the end of this presentation, you'll be asking some questions. All right. Okay, so the first challenge with thinking about resilience is that you actually have to engage with the concept that there may be failure. And many of your organisations will be very large, have been around for many years, and the idea that failure may be imminent might actually be quite challenging. But if you look at the experience of Swissair, who shut its doors just 3 weeks after the September 11th attacks, and before then was known to be so robust and financially sound that its nickname was the Flying Bank. If an institution like that can quickly crumple and fail, then so too could any of your organisations. And unfortunately, your resilience is critically important, because if insurers fail, then that has the potential to bring down a house of cards scenario for the rest of our communities. I do quite a lot of work with the Australians and their critical infrastructure sector, and over there they actually define the banking and finance sector as one of their critical infrastructures. I think that's something that we should be thinking about within New Zealand as well. It's a recognition that actually you are part of the oil that keeps the money going around, and if you aren't there for the community after the event, then that has major impacts beyond just your individual failure. So you are just as important as the power and the water and the transportation network to getting our communities through times of adversity. So resilience isn't just about having strategies for dealing with the risks that we know about. Actually, dealing with the risks that we know about, the knowable risks, is the easy bit. You can buy insurance for that. The challenge is actually getting your organisation to be prepared for the risks that potentially it doesn't know about. And the big risks that are likely to be sitting on your risk register in 10 or 15 years' time, you may not have even thought about yet. So resilience is a different way of framing the question. Rather than coming from a risk-based approach in terms of trying to identify all of the big scary things coming over the horizon, resilience is about building a capability, a mindset to be able to deal with whatever comes, whether you knew it was coming or not. And so I'm going to talk about what are some of the things, the capabilities that will enable your organisations to do that. So who are we? You're probably thinking, who is she talking about resilience? So I'm from Resilient Organisations, and back in about 2004, the New Zealand government gave us a 6-year research grant to try and understand what does resilience look like for an organisation. And so we have over that time had about 35 researchers from all around New Zealand looking at this big hairy problem, coming from many different disciplines, because there's no single answer. It's a complex problem. So we've had people from the engineering school, the business school, psychologists, geographers, geologists, all working on this challenge. And these days we're also a social enterprise, so we both still do core research, but also practically help organisations get through and improve their resilience. And through the Christchurch earthquakes, we've done a lot of research actually tracking which organisations do manage to get through times of crisis. So we've had the opportunity to put some of the latest theories to the test. So what do we mean by resilience? So essentially, we're talking about resilience as not only being able to survive a crisis. I mean, that's the prerequisite. You don't survive and you weren't resilient. But resilience is something above that. Resilience is also about having the capability to thrive in a world of uncertainty and change. And if you think about our world in another 10 years' time, the one thing you could not say about it is that uncertainty and change are likely to reduce. Okay, so resilience, if it's giving you a capability to be able to perform really well in those environments. So it's not actually an insurance type offering. It's not about managing and protecting from risk. This is actually a strategic capability. If your organisation can perform really well in those sorts of environments, you have a unique business proposition, and if you can do that better than your competitors. So what is needed to be resilient? So over about 15 years worth of research, these are the key things that we identify, and this is similar across large organisations, small organisations. We've worked with people in the critical infrastructure through to NGOs. The same core elements keep emerging through. So there are 13 indicators that we specifically look for at an organisation when we're looking at them in peacetime to try and understand how they'll perform. And they group around an organisation's leadership and culture. So an organisation's leadership, how well engaged their staff are, the organisation's situational awareness, how well it understands what's happening in the environment around it, how the organisation makes decisions, and the organisation's levels of innovation and creativity. Because I've never seen a crisis that meets the plan. You're always going to have to develop new strategies on the fly. But managing a crisis on your own is never enough. If it's a truly existential crisis for your organisation, you're going to need to rely on a network of friends and supporters to help your organisation through. So resilience also depends upon your organisation's networks and relationships on which it relies. We often talk about 3 a.m. friends. So if a 3 a.m. friend is someone who you don't mind phoning at 3 a.m. when you've got a problem, and one, they'll see your number flash up and they'll take the call and they'll be prepared to get out of bed to make your problem their problem. Your organisations need 3 a.m. friends because contracts, etc., they don't really matter when the balloon really goes up. It's whether organisations want to come in and support your organisation. So here we're looking at the quality of the partnerships that your organisations are forming with other organisations you might need during times of adversity, your level of internal resources. Are you lean, mean, and already operating at 120%? What's your capacity for surge if it's needed in times of adversity? We also look at how well you leverage knowledge from within your organisation and whether or not you have the capability to break down silos and to get different parts of your organisation operating and working well together. The third attribute that we look at is how well your organisation strategically positions itself to be change ready. And this is around your posture. Are you quite a proactive organisation, trying to sense what's coming down the line and getting ahead of it, or do you wait for the world to happen to your organisation? Does your organisation have a unity of purpose, such that when communication breaks down and the balloon goes up, people actually know what's important for your organisation? One of the best examples of this is a contracting organisation that I once did some work with, and I'd talk to the chief executive and say, what's really important? And he would tell me the core priorities. And then I went and talked to some of the digger drivers, and I said, what's important in times? And they used very different words, but essentially they told me the same thing. What that means is that in times of crisis, that organisation is going to pull together. It's like the tug of war analogy that Liz was just showing. And then finally, we look at an organisation's planning strategies, so the extent to which they do think about the risks that they might face and are addressing them, but also the extent to which they stress test those plans, really challenge their assumptions and critique the extent to which they can actually implement them. So you can see normally if I was talking about crisis management, you'd be thinking about those last two, planning strategies and stress testing plans. But actually resilience is far more about the culture and the ethos and how your organisation operates in the day-to-day. those are the skills and capabilities that your organisation will be bringing to the table in any crisis, and they're the ones that will enable it to get through. So, some things for you to think about as an insurer. The first one is, has everyone heard the analogy of cobbler's kids are often the ones that don't have any shoes? I'm sure you're always telling your organisations to think about their existential threats and to have plans in place to mitigate the risk, etc. But I guess my challenge for you is to think about the extent to which your organisation has done enough. I'm sure you've all got plans, but are they sufficiently robust, and have they thought creatively enough about the scale and type of crises that your organisation might face? For example, even just thinking about a cat event, like say for example, not the herding cats, but a catastrophic event. Thinking about Christchurch, and I heard a lot of times about how the claim settlement process was exceedingly complex and Christchurch was just such a challenging event. That ain't nothing. Think about what Wellington's going to be like, So, we actually need to be able to embrace and find strategies to be able to work with that sort of complexity, rather than sort of saying that was in the too hard basket. So thinking about some of these fat-tailed events and making sure that your organisation has really engaged with the process and thought about how you will work through that. The next challenge is for your organisation to think about its situational awareness. And I worked quite a lot, I was the fairy godmother within the University of Canterbury's Emergency Operations Centre during the Christchurch earthquakes. And it was very interesting that very soon after the event, the strategic team made an important recognition that actually their problem was not broken buildings and the fact that they couldn't teach lectures, etc. Their problem, their big strategic problem, was going to be maintaining student enrolments. So they had to think very strategically about how they were going to maintain student enrolments, because a business without customers basically is a dead man walking in terms of a business. And there was actually a study that came out from university presidents back in 2007, and the quote from that report is, while it's not immediately apparent when a disaster strikes, the most important responsibility for the president or the university vice-chancellor is minimising enrolment loss. So they very quickly at the University of Canterbury recognised what their strategic challenge is. After a major event, it would be interesting to see to the extent to which your executive teams and your boards are recognising what are the major strategic challenges that your organisation is going to face at this time. I suggest that the next time that you run an emergency exercise or something like that, that you actually engage this executive team and the board and ask them some key questions. What about this scenario might mean that people no longer want to buy insurance? In other words, insurance is no longer a product that they see as adding value to them. What about this event might change our licence to operate within this community, either the social licence or the regulatory licence to operate in this community? And then the third question is, what might change the fact whether people want to buy their insurance from us versus our 3 other competitors or our 5 other competitors within this market? So too often we gear our organisations to think about managing these crises at a very operational level, and we test the operational capability to manage crises, but we don't enough get the board and the executive team thinking about the strategic implications. And yet those 3 questions are the thing that could bring your organisation to its knees. Whether you take a little bit longer to settle claims is not likely to bring your organisation to its knees, but a change in any one of those 3 questions could potentially. I'm borrowing an idea here that I heard from an Aon Benfield conference a couple of years ago, and it was from a guy from Aon Benfield in Singapore, I think. And the good thing about this idea is I remembered the imagery. He was talking about how within an insurer's perspective, we have this bubble of white, the types of risks that we insure. And then there's the black zone of the risks that we don't really know and the risks that we can't necessarily quantify, and therefore we don't actually want to price and actually insure. And the whole focus of the insurers tends to be on increasing the size of the white bubble. Can we quantify more? Are there more different kinds of risks that we could insure? I think one of the big challenges for you is to think about this from the other side of the coin, from the insured's side of the coin. Because from my perspective, I want the black insured. I want the whole shaboodle. If I think, for example, I just looked up in my crisis cover, you know, when you get life insurance, you can also get crisis cover insurance. And the list of events that they would pay out on, and these were just the P's, they would pay out on if I had paralysis, Parkinson's, I don't even know what that is, or pulmonary hypertension. As an insured, I don't know what's missing from that list. You know, are there other P's that potentially are the black things that aren't being insured? So a real challenge for you is to think about this from the insured's perspective. And if you think about, this is the view as you drive from Christchurch towards Arthur's Pass. This is where I live. So this is the classic view of the Torlease Range. If you move just 10 kilometres to the left to where we live, this is what that exact same mountain range looks like. It's the same mountain, but it looks very different depending upon your perspective. And I've often talked with insurers individually, people from insurance companies, about this challenge of how do we get the black insured? Because that is the potential for Uberization of your thing. And they're like, but as insurers, there's no, how doesn't matter. If you're thinking from a consumer's perspective, they want the black insured. And if there is a way that you can strategically find a way to insure the black, then that is where the nice spot sits for you. So change is coming, and it's about getting your organisation in a place where it can actually embrace and do that change quite well. But what this comes down to essentially is around people and the culture within your organisations. So it's right across the organisation where you need this innovative thinking to be coming through, not siloed into little innovation hubs, etc., but right through your organisation. Because when an existential crisis hits for your organisation, the whole of your organisation is going to have to mobilise. So you're needing this resilience culture to be coming quite through. It's also worthwhile thinking about trust and how we build it up. So my perception, coming from an insured's perspective, is that there is good level of trust for the insurance sector from the big end of town. However, if you went and asked the homeowners or the small business owners, I actually think that's a major vulnerability if we think about your social license to operate. And so that is a key issue that you need to think about in terms of future survivability of your sector. It's also about building innovation and creativity within your organisation. I really liked Ralph's analogy in terms of, getting off, if you're on a dead horse, maybe it's time to get off the dead horse. Well, we do a lot of work. One of our PhDs is looking at the SAS, people who work in this environment in the Army. They're the special forces. They get flown into uncertain environments where there isn't necessarily an easy solution. And one of the things that they have is curiosity. So I'd potentially reframe Ralph's solution to, rather than getting off the dead horse, thinking about it as a challenge. How can we use the dead horse? Will the dead horse be able to help us get to where we're wanting to go? I guess from a resilience perspective, we can think about, bringing together crisis and strategy. So you can either get defensive about the types of change that you have in place, or you can start getting quite strategic and think of your resilience as a strategic capability, developing the capabilities to surf that wave that's coming. Because resilience has both planned and adaptive capabilities. Your organisation needs to do the thinking about the types of risks it's going to face, but it also needs to be adaptive and agile, and that comes from the culture of your organisation and how that emerges. So I've got a simple little diagnostic. It's a little tool that you can each take back to your own organisation and use to try and understand where you sit. If these are the 13 indicators of resilience, how would your organisation actually measure up to these? So it's a quick diagnostic. This was developed by us in conjunction with the Resilience Expert Advisory Group over in Australia. We work with the critical infrastructure sector over there. 13 questions, and I suggest you use this with your executive team next time you get half an hour of their time. 13 questions, they can just score it, tick it on a scale of weak to strong, one against each of those different questions. And I went out and I got a little sample of insurers over the morning tea break, so thank you to those people who I cornered and forced you to answer this. And it will show you the sort of results that you can start getting out. So this is from 10 different insurance companies, so this isn't the result of a insurance company, but it shows you the sort of strengths and the weaknesses that might potentially be out there for your sector. So across all of these different organisations, you can see that situation awareness appears to be a fairly common weak area for your sector. So too does your level of internal resources that you can draw on, or your surge capacity in times of crisis. And so too does the level of unity of purpose. In other words, does your organisation have a clear vision, and does everyone in that organisation know where that organisation is going? Diagnosis is the first step. You know, once you can acknowledge where the strengths and weaknesses are, you can have a discussion about them in terms of how you leverage those strengths and how you address the weaknesses. And if anyone wants to use that tool, the questions are in the booklet out there, but I've also got a little Excel spreadsheet that you can use to quickly populate the results, and I'm happy to share that for free with anyone. Just email me and get in touch. It's about having a conversation, because you know, these things, this lack of situational awareness, that will potentially be your bugbear, because you're potentially managing the wrong sorts of risks. You're potentially managing the risks that are easier to see and not necessarily the ones that are going to come and bite you. Without a unity of purpose, you'll be going in multiple different directions, and without thinking quite creatively about how you use your internal resources effectively, you're just going to burn out and fail when the event gets sufficiently large. So, coming back, it's all about leadership and culture, having good effective networks and relationships that you can draw on in times of adversity, and getting your organisation to get its mojo, to think, be quite strategic and get ahead of the curve, and be positioned to embrace change and capture the opportunities that come from change, rather than thinking of it as a risk that needs to be insured against or managed. So thank you. If anyone does want some of these tools to try out with their teams, more than welcome to just let me know, and I'll happily share them with you. Thank you.